Hi, this is Shelley Kraft coming to you live on SNNLive. We're at the Cambridge House International World Resource Investment Conference, June 2013, right here in Vancouver, BC, Canada. I have with me Leonard Melman of the Melman Report, a speaker, editor, and an analyst in the industry. Welcome back to SNNLive.
And my pleasure to be here, Shelley.
So what did you speak about today?
I talked about the fact that there are two basic trends that I see in the resource stocks, which have been somewhat beaten up, admittedly. The first is that the short term still is risky, but I think if there is one more sell-off, that will be the end of the downward move. Then I really believe there is a gradual long-term strengthening that is going to take place and accelerate, particularly through the second half of the year.
I want to ask you, how do you define risk?
Risk is clearly the potential for an investment to go in a direction that you don't want it to go. In the case of anything dealing with the resource shares, most people buy them in the anticipation they'll go up. Unfortunately, there have been many surprise factors which have caused them to go down sometimes quite severely. So risk is the opposite of certainty. And the higher the degree of risk, the more uncertain the background is for the investor.
Well, in the world of resources, you know, there may be companies that might not have enough money to stay afloat. They go to zero. Then there may be companies who might not have enough money to finish the exploration. Then there may be companies that can't go into production. But the chances of them being fleshed out in this market are very high. I happen to agree with you.
Well, the problem is, and you hit it right on the button, many companies have simply run out of exploration money. They are raising sufficient funds just to pay the rent, keep a skeleton staff, and hope and pray for a better day, but they don't have any money to do any drilling, get any assays, do any of the things that normally generate excitement for the shares. So the problem then becomes people who already hold those shares, if they try to get out, they are trying to get out into illiquid markets, very little activity because there's no news, and so their sell orders drive the prices lower, which in turn convinces more people they should sell, and it's been in that kind of downward spiral throughout most of 2012 and virtually all of 2013 so far.
So is it a case of only the strong survive?
It is very much a case of that. The large companies that are in production and have strong revenue coming in are in a wonderful position, because as the small juniors who don't have the financial wherewithal to stick around go out of business, all their projects, many of which have seen a great deal of exploration and development, go on the market. And you know yourself, when you have a flash sale where you got to get out, that's when prices collapse. And I think the people that have money, major productive resource mines, are going to be in a position to buy up wonderful projects at fire sale prices, and it could make them incredibly wealthy over the next few years.
I would call that smart money.
Absolutely. And also those companies that are able to survive, barely if necessary, they could profit, and I'm pointing this out to many of my readers, they could profit immensely if they just hold on, and we get a huge rally in gold and silver particularly, because then the industry will start upvaluing the companies to reflect the growing value of their assets that are in the ground, just based on the potential profits that can be made. That's what happened to a lot of companies in 2010, 2011. They looked dismally valued at the end of 2009. Then once gold took off toward 12, 14, 1700, and ultimately 19, boy, people just recalculated how much their projects were worth at ever higher prices. And people made multiples 5, 10, 15, 20 times their original investment.
So tell me about the Melman Report. for our viewers.
The Melman Report is the culmination of my being involved in this business for 35 years as a writer, as a stockbroker, as an analyst. And the site is open to the public. The readership is free. The financial freight of the site is paid for by our subscribing companies who use the site simply to have a vehicle to provide the public with information about their companies. The heart of the site, from my point of view, is a report I issue every Monday, Wednesday, and Friday called Melman Minutes. And also, whenever I find a very special topic worth developing, I issue what's called a Melmania. These are all available. People can go to our site, www.themelmanreport.com, and simply sign up free, and they'll start getting these mailings on a blast list basis every Monday, Wednesday, Friday.
Ladies and gentlemen, I'm going to give him a new name called Melman the Mailman. That's what.
Well, instead of the postal service, I'll use the email service, but that's what it's all about.
There you go. E. Melman. Ladies and gentlemen, Leonard Melman of the Melman Report, speaker, editor, industry analyst. I'm Shelley Kraft at SNNLive. We're at the Cambridge House International World Resource Investment Conference, June 2013, here in Vancouver. Leonard, thanks for coming on to SNNLive.
My pleasure indeed, Shelley. It's always a pleasure to visit with you.
Good to see you.